Hey everyone, it's Rick, former investment banker, buy-side analyst and prop trader with 25 years in the game. Today I'm combining positioning, sentiment, and technicals to hunt for asymmetric trade setups. Welcome to Offsides Macro. Hey everybody, I'll start off really quick with an observation on positioning in general. If you followed me for a while, you know that I've developed a proprietary positioning index that I call the OPI, and I include the statistics on that each week in my note. I'm doing this for two purposes. One, I'm truly agnostic on the outcome here, but I just want to understand if blind positioning with no discretionary or additional factors in a model or system, if it works or not. And I also use that data as my North Star, so to speak, for my discretionary system, but more on that another time. I won't go into the details now, but I've written on the OPI extensively, and without doing a deep dive right now, I basically look on a weekly basis to see which positions based on my oscillator are offsides, and then I just put on a vol-based position, and I exit when that positioning becomes neutral. It started off the year incredibly well, and I'll walk you through that chart in a moment when we walk through the deck. But it had a meaningful drawdown from mid-May until about the middle of July. And a lot of that was driven by positions in FX. The developed market currencies were just wildly offsides long as a group, and the OPI got a little over its skis with long exposure to the US dollar. But I didn't want to cap it in any specific asset class because then the data is just not that pure. This worked very well last year before I designed the OPI, especially in currencies. And now if I can make a quick observation on the developed market FX, we've got quite a dispersion now with the currencies like the euro, which we all know is heavily weighted in the Dixie index. It's very offsides long, but we have other currencies like the British pound, the Aussie dollar that are very shorted at the moment. But net, it looks like the OPI has recovered quite well, and it's only about 5% off the highs. And the concept or experiment, if you will, in general, so far tells me that the answer is yes for positioning working. But the rub is that the experiment is less than 9 months old, so the jury's still out on that. I plan on taking a much deeper dive into the statistics in Q1, and I'll probably publish some sort of very basic white paper on my findings. I'm an event-driven trader. You guys know that. So why am I doing this? Curiosity, I guess. I'm just trying to figure out another style of trading, and trying to do so can be obviously very addictive. Let's talk about the recent highlighted markets over the last 1 to 2 weeks. When I have time to do it, I go over somewhat of a report card, if you will, and I'll do that right now. This is not a victory lap. I think the way I'm crunching the data is differentiated from anything else that's out there, but this is not overly complicated. I'm not doing a deep dive on fundamental work or the futures curve or weather patterns. I'm keeping it relatively simple, and I'm just looking at positioning. And I'll point out that positioning has been telling us to be long Russell, short NASDAQ, and we all know that trade had a monster week. It was also very highly successful sniffing out potential moves in the British pound, palladium, and heating oil, and something I mentioned a couple weeks ago, the softs on the long side, which had a very big week, especially in coffee, which was up around 10%. Will this continue? No one knows. I'm not going to sound like some of the other charlatans out there and bullshit you guys, but the game of trading, as we know, is just simply sticking to your rules, maintaining strict risk management, rinse and repeat. You'll hear me use the term offsides quite a bit. I've written on this extensively, but consider it in the context of a sports analogy. Being offsides is not a place you want to be. Lastly, for the best experience, I highly recommend you open the deck listed in the show notes. The charts and tables that I reference will help you fully connect the dots. So let's dive into the deck that's listed in the show notes. I typically start off with some high-level observations, and then we'll take a deeper dive into the charts. But overall, based on positioning, the buy Russell, sell NASDAQ setup still stands. On bonds, the long end of the curve is not quite set up for a short, but the front end of the curve, especially in 2s and 5s, looks like a buy to me based on positioning. So it's possible that the steepener trade can continue working. In the metals, we've seen palladium offsides long, which I pointed out last week. That was reasonably down on the week. But we now have copper joining palladium in the offsides long territory, despite the recent pullback. And what's interesting and I made this observation, I think in my Discord, is the prior week's copper positioning was actually unchanged. And that data included pre and post that dump that we had on July 30th. But that was only because retail was buying and the institutional speculators were selling pretty much one for one. This week we have the opposite. We have the institutional speculators buying while retail is marginally stopping out of that long trade that they had on. On energy, I'm recording this prior to the outcome of the Trump-Putin meeting. And if you did not watch the short clip of the two of them meeting on the tarmac, you've got to check it out. It's amazing. Trump orchestrated a flyover, probably by an F-16, as they were walking the red carpet just to flex. And Putin heard it coming in, and his face is just absolute gold. So beautiful. Anyway, having said that, WTI crude is now in the offsides short position, and heating oil remains offsides long, as I mentioned last week. The correlation there, I have it roughly 0.85, so this could set up for a decent pair trade, but any comments ahead of this meeting is just not going to age well. There's also some debate on how much of a war premium is still built into crude, but given the positioning, I think that any dump in crude could be a really good setup on the long side, even though we have all these continued headwinds, pumping oil, etc. But if we can see a dump on any potential negative crude headline, and you can sort of tell that the speculators are stuck short, I think that could be a really interesting long setup. I'm also very focused on the action into Sunday night and into Monday, so we'll see. Lastly, I've been chirping on the softs for a few weeks now, and as a group, they exited the offside short positioning, had a big week, as I mentioned earlier, especially in coffee, which was up around 10%. But I still think that group could be very primed heading into the rest of the year. The seasonality supports this, and the trend CTAs that I track via the SocGen Trend Indicator Index that we'll get into in a moment, it's in my zeros and ones, they've been short the entire group for a while, making money. But recently, only in the last couple days, it looks like they flipped long cocoa. So if the group holds in or creeps higher, we know that that cohort is trapped, and they'll begin to cover. Scroll with me to the highlighted market section where you can see the charts. I always start off with the equities because most people are interested there. And you can see this dispersion between the S&P, Russell, and Dow being offside short versus the NASDAQ looking very overly extended long. So that pair trade, in theory, could continue. Scroll with me and you'll see the proprietary Dixie weighted developed market FX oscillator that I've created that looks at positioning across the developed market currencies. And then what I do is I weight them according to the same construction of the Dixie. And despite that group, you can see flirting with offsides long ever since May. The flows in the dollar obviously just continue to pressure USD. So maybe now that we've moved away from near offsides long, sometimes I like to look at what I call an exit from offsides territory. Maybe this long USD trade can finally start to work. I just don't hear anything about the US dollar anymore and how the US is about to become this like so-called banana republic. So maybe the fact that we don't hear anything there could be a little bit telling. And I'm pointing at the obvious because of the inverse correlation, but I think you can express that short the euro. If you scroll with me, I've highlighted 4 currencies that are offsides, and the Mexican peso is now going to be a focus for me over the next 1 to 2 weeks. You can see it's in offsides long territory. Continue scrolling and you can see the charts in the metals. Copper and palladium that I mentioned earlier are both now in the offsides long territory. The oscillator in copper could be a little bit misleading if you take a look at the histogram. In theory, it's possible. There's still a long way to go here. But in palladium, we have both the oscillator and the absolute level near highs. So I think that could be an interesting short setup. Continue scrolling and you can see the 2 energy names that I mentioned, WTI and heating oil. And lastly, the final 4 charts are the softs that I think you should have on your screen for setups. The next section is called zeros and ones. I've done a primer on this in the past, but it's basically my answer key. And you can see where positioning is in the August 12 column for each instrument. And you can see what's in my OPI. And I think it's always very interesting, as I mentioned earlier, to understand where the trend CTA guys are. And that's the SG trend indicator column. They continue to be very long equities, very short the US dollar, long metals, long energy, short the grains, and short the softs. At the bottom of that section, there's a snapshot on how each instrument traded last week, and I always look at multiples of daily volatility because talking percent change in like the fives versus natural gas would be like an irrelevant metric. Lastly is my Offsides Positioning Index, which I mentioned in the opening comments, and there's been quite a recovery. Again, this is a very simplistic way to look at whether positioning is working or not. Da Vinci is credited saying simplicity is the ultimate sophistication. Thank you for coming to Offsides Macro. The views expressed are my own and do not represent the views of any employer or affiliated institution. Nothing discussed should be considered financial advice. This content is for informational, educational, and entertainment purposes only.